Alison Cooper, CEO at Imperial Tobacco, thanks for joining us. Look, you've had a good result in the UK. It's 45% of your revenue, but you've got some big headwinds: duty increase, promotions ban, you're facing your logos being blacked out. What impact is that going to have on your revenue and your sales here in the UK?
I think it's important to put the UK in the context of the total business. So yes, we do have a significant UK business, but at the same time we have a very substantial business in the rest of the EU and the rest of the world. And I think for Imperial, we are playing the portfolio, whether it be a portfolio of markets or whether it be a portfolio of brands and products. And I love to use the phrase total tobacco about our business. We're uniquely placed with a total tobacco asset, which means we're always talking about what's happening across a range of products. So not just cigarette, but also fine cut, cigars, snus, other products that we have in our tobacco portfolio. So if I look at the UK market, even though you can see declines in the cigarette market, we've got growth in fine cut, and that's coming through very strongly. So with brands like Golden Virginia, fine cut brands like JPS as well, which we've also provided in a roll your own and make your own format. You've got growth in those products despite some of the pressures on the cigarette market.
Do those products, is it your ambition that those products will help me balance the portfolio in terms of lost stick sales?
But if you look at the consumers are clearly looking for value, and that's not new. That's been going on for a long time, particularly in EU markets, with increasing excise, with increasing prices, and clearly currently now with the economic environment as well. So the consumer's looking for value. So our opportunity, our focus is how do we provide them with that value? And that value is around cigarettes, but it's also around fine cut and around other opportunities for the consumer. And we have a portfolio that means that we can grow and find opportunities in that environment. And that's a key point for Imperial.
You've managed to raise prices, and that's part of your strategy. But at what point does it become a negative for your customers? What ability do you have to continue to raise prices?
Tobacco is uniquely placed in terms of pricing, because actually it's the government who takes the lion's share of the price of a tobacco product, and significantly so in the UK. It's 80 to 90% of the price of the pack that's smoked. So therefore the opportunity for us is actually when we take a small price increase, in terms of what the consumer actually experiences, that's a larger price increase for us, because actually the government takes the lion's share of the revenue of any of the products that are sold in the UK. So that opportunity is there and has continued to be there for us and across other EU markets as well. And we've seen opportunities to increase price in most of our markets across the globe. We've highlighted 80% of what we expect to achieve in this current financial year has already been embedded in our numbers in our release today.
Let's look at emerging markets now. Give me a sense of what geographies and what products are going to take you forward as a business.
Emerging markets for us, we've got three really strong areas for Imperial. Africa, Middle East. We've had some very good results there, particularly in North Africa and some of the Middle East markets. Brands such as Gauloises and Davidoff are doing really well for us. Eastern Europe, we've got big presences in Russia and in Ukraine. I'm really pleased to see our share position in Russia is on a growing trend in this last quarter, which is something we've been looking at with the portfolio there. Again, it's brands such as West, but also a very strong, more local brand called Style that's doing well for us. And then Asia, where we've got a big Taiwan business, growth in our Taiwan share, but also a big business in Indochina that's doing well for us as well. Those are our three key focus areas, and some good dynamics for us there, particularly with our key strategic brands.
Now, the tobacco industry is famed for its ability to lobby. Do you find that this government is receptive to your messages?
I think this is a government that is looking at regulation in various forms for various businesses. And I think it's important that it sticks by the principles it set out, which was around looking at better regulation and evidence-based regulation. So I think that's particularly important, that really the government's sticking to what it committed to do in the first place when it got elected.
Do they embrace you as an industry? Are they open to your call?
I think the government in total is difficult to talk about in its entirety. Clearly it has very different interests within government. We're in the process currently of a consultation on plain packs. But there are other stakeholders in government as well who've clearly got some agendas. They're concerned about things like illicit trade, for example, if you get some of these things wrong. And the combination of regulation and excise clearly isn't helpful for illicit trade. And we've seen that in a number of markets across the globe.
And what's the strategy, Alison, to defend Imperial Tobacco against this impending ban on your logos?
I think the objective arguments are very much on our side. This is regulation. If I look at it more broadly from a business perspective, this is sort of regulation that businesses really have to object to, because there's no need for it, and it's not evidence based. There's no genuine evidence that would support this regulation in terms of its effectiveness. Actually, it's talking about some quite extreme things like taking away our intellectual property, which has not only got UK implications, but clearly we operate in the EU environment as well. So I think it's a business issue. You may be aware that we're also consulting on alcohol at the moment, which includes a plain packaging consultation as well. So this is quite a serious business issue in terms of regulation. And clearly we've got some very strong objective arguments, and we'll submit those in the consultation.
Now, you've raised the dividend today. Is that part of a broader strategy at play whenever there's speculation about your business being a potential bid target for the likes of BAT? Is that part of the defensive play?
The dividend you've seen today is actually a formulaic approach, in that we always have roughly a third of our last total year's dividend as our interim dividend. So it's you can do it on a calculator. It's not something that's strategically thought about in darkened rooms. So the dividend is very much formulaic at the half year. We're in line with the policy we've announced on our dividend growth, which is to grow ahead of our adjusted earnings per share growth. You saw that at last year end, and clearly the board will maintain that strategy going forward. But so that's very much around our commitment to return cash to our shareholders, which goes hand in hand with our £500 million per annum buyback. So that's very much the driver, doing the best with our cash for shareholders.
And do you feel that that's a business threat to you, the potential that somebody else is looking across your business?
I don't think any business can ever look at that as a threat. If you're seriously out there around shareholder value and shareholder returns, you'll always look at any of these things. But I'm very consistent in my comment on this particular construction, in that I know people like to speculate. It's not impossible, but if you look at the antitrust aspects, it would be a very, very difficult thing to actually achieve.